Do crypto index funds and ETFs actually beat the guy who spent 3 sleepless nights researching obscure altcoins on Reddit? Let's find out. Because the answer might make you feel either very smart or deeply embarrassed about your portfolio. We're living in a moment where Bitcoin ETFs just crossed $100 billion in assets under management, and suddenly every traditional finance institution that once called crypto a Ponzi scheme is quietly building a product around it. The irony is so thick you could stake it. The core question here is really a battle between two philosophies: diversified, passive exposure versus the thrill of picking winners in what is essentially the world's most volatile casino. And just like in traditional markets, the math tends to quietly humiliate the thrill seekers over time. Here's the mechanism working against you. Crypto index funds and ETFs charge fees sometimes between 0.5 and 1.5% annually. But the average retail altcoin picker loses far more than that through emotional trading, mistimed exits, and chasing pumps. Fees are the advertised cost. Your own behavior is the hidden one. Think back to 2021, when every altcoin had a white paper, a Discord, and a roadmap to revolutionize, something nobody asked to be revolutionized. The headlines were euphoric, the influencers were unanimous, and then with the grace of a bowling ball through a glass ceiling, most of those coins lost over 90% of their value. Psychologically, picking individual altcoins feels like skill because occasional wins produce dopamine hits that feel like genius. But studies across traditional equities show that even professional fund managers fail to beat passive index returns over 10-year periods, and crypto, with its manufactured hype cycles, is exponentially harder to navigate. Historically, crypto moves in 4-year cycles, roughly tied to Bitcoin's halving events. And if you zoom out, the pattern of altcoin season follows. Bitcoin dominance peaks has repeated with almost comic predictability. Yet every cycle, a new wave of investors swears this time the fundamentals are different, and they're always partially right and catastrophically wrong simultaneously. One of the biggest misconceptions is that an index fund means settling for mediocrity, when in practice, capturing broad market exposure in crypto has historically meant capturing the explosive upside of the entire asset class, while reducing the very real risk of holding a coin that quietly disappears. You're not settling, you're surviving. Another myth worth bearing is that picking altcoins is research-driven alpha, when most retail participation is actually narrative-driven momentum, meaning you're not analyzing a project, you're reacting to a tweet. The ETF doesn't tweet, doesn't panic, and doesn't sell at the bottom because someone posted a red candle meme. The practical lesson from every cycle is simple. Position sizing and consistency beat conviction every single time. Allocating a fixed, manageable percentage of your portfolio to a diversified crypto vehicle monthly, regardless of price, removes the single biggest variable destroying returns, which is you making emotional decisions. If you insist on picking individual altcoins, treat it like a satellite position 5 to 10% of your crypto allocation, maximum, while anchoring the rest in a diversified product with transparent methodology. That way, the dopamine is budgeted, and the damage is capped. At a philosophical level, the market doesn't reward effort, it rewards process, patience, and positioning. And those 3 things are built into a disciplined index approach far more reliably than into any midnight altcoin research session. You don't have to be the smartest person in the room, you just have to be the last one standing. The beautiful absurdity here is that the boring answer, buy the index, hold consistently, ignore the noise, is the one most people intellectually agree with and emotionally refuse to follow. Discipline isn't exciting, but neither is watching your hand-picked altcoin portfolio become a cautionary tale at Thanksgiving dinner. Whatever path you choose, being prepared, rational, and sized appropriately means you can absorb the volatility without panic, and in crypto, the ability to stay in the game during the painful stretches is the actual edge. Comfort with uncertainty isn't weakness, it's the whole strategy. Whether you're exploring crypto exposure, building long-term wealth through real estate, or need help with home contracting or finding the right lender, we can help you get started. Check out our links in the description below.